Hi, I'm Gareth Van Zel, and I'm the editor of ITWeb Africa.com, and welcome to our Tech Markets Report this week, where we look at the best and worst performing tech stocks in Africa across some of the stock exchanges on the continent. It's been quite a hot week in Johannesburg, where temperatures have soared above 30 degrees, and one can say that those same kind of simmering temperatures have continued on the Johannesburg Stock Exchange, with the rally on that particular stock exchange. This has continued despite strikes in the country and concerns from the likes of Moody's. They've, of course, have downgraded the country in recent times, which means that we'll have to pay more to borrow money. But nevertheless, it seems like the rally hasn't stopped yet, and one company that is benefiting from this is a company called Datacentrics. They're an IT solutions firm, and they focus on networking and data center kind of offerings. And they've had some really good results of late. In fact, it's pushed their share price up just over 6% today to reach R4.75. Their revenue has grown from 913 million rand to 977 million rand, so quite significant revenue growth there. However, their profit, though, hasn't been as good as it's been in previous years. That has fallen from just over 52 million rand to 37.5 million rand. There have been some concerns about that, but nevertheless, still really good results, and it's showing on the stock exchange at the moment. One share that hasn't done particularly well, and we're going to look a little bit further afield this week, is Safaricom, which is a telco in Kenya. And on the stock exchange in that particular country, that stock is down over 1% today. It's mainly owing to this kind of fake phone switch off that has happened in Kenya over the week. Of course, a lot of the counterfeit devices in Kenya have been switched off in terms of telcos stopping services to these devices. It's come as a result of the Communication Commission in that country basically issuing an order to switch off all these devices, and we've had over 1 million devices that have been switched off in total. Safaricom in particular has switched off over 600,000 devices, so this means that they've lost over 600,000 customers, despite the fact that these customers have been using fake devices. So there are concerns about how they're going to make that money back now, whether these customers are going to end up buying legitimate devices and whether they can even afford legitimate devices. So there are some concerns over that telco there. So their share price, as I say, it's basically dropped just over 1% to reach 4 Kenyan shillings at the moment. And that's our tech report for this week in terms of the stock markets. Thank you very much for watching. My name's Gareth. Cheers.